And does it suggest that you see recent gains as being a dead cat bounce, that there's no kind of longevity, or this is, the turning point when it comes to where we go from here?
Yeah, I think if you go back to last October, we had a trough in the overall Asia and EM equity markets, and China troughed a little bit after some of the others like Taiwan and Korea. But we're up a healthy percentage really for most Asian markets. So off the bottom, Taiwan, which we also downgraded, is up almost 40%, China around 30%. And when we do our valuation work and we look at the pattern of earnings revisions, we think it's time to adjust the portfolio. So we took down China, Taiwan and Australia to an outright underweight. And we put India as a major overweight, which is the market we're most excited about right now.
So do you expect further inflows to a market like India at the expense of China? I mean, I guess that's kind of your alternative when it comes to the EM growth play.
Yeah, there's an interesting pattern to flows in Asia year to date. The standout winner by far has been Japan, with about $70 billion of inflow. And that's a market that sits outside of the Asia ex-Japan and EM universe, and which we do like. For India versus China, to your question, we are getting some profound changes in performance relative, which we haven't seen really in the prior 2 decades. So India began to structurally outperform China about 18 months ago on the equity side. And that's to do with superior earnings performance in dollar terms. And also, even more interesting is that the currency in real effective terms, the Indian rupee, is structurally strengthening against the Chinese yuan. And that's to do with changing patterns of capital flows. So portfolio flows such as equity flows, but also FDI and private equity, which is really moving towards India in a major way.
So in terms of this China versus India argument, let's start first on the China side. To what extent has investor confidence and therefore the ability for China to recover and keep growing and maybe not have you say, let's take our profits, how much is that the government's fault? And to what extent does the government have the power to change that now?
Well, equities, by their essence, are driven by return on equity. Return on equity has been falling in China for 10 or 12 years. That's an interesting development. It's very different from the previous period. And it's to do with individual business performance, but it's certainly the case that economic growth in China has reduced structurally. One of the things we pointed out in our note is that whilst the nominal GDP growth environment this year is very healthy in Japan or India, it's really quite weak in China. And actually, the overall core inflation in China is pretty well zero. So that ability to generate sustained earnings growth has become really quite impaired in recent years in China.
Well, you're lauding India as a place to invest. A lot of people are saying Japan's a good place to go. Again, how much is being driven by the kinds of growth policies, the kind of steps that have been taken, particularly in India, because there was doubt over India for a long time, that investors can count on to continue to create this landscape for companies to grow?
So India's always been demographically advantaged with a young population. So in that sense, it's the classic EM story of urbanization, household formation, industrialization. But what was really missing until probably the last 10 years or so is a structural improvement in the budget and a change in the mix of government spending to deliver on infrastructure. I was in India in June, and you can just see the transformation that's going on in India's big cities now. And so that infrastructure itself enables private investment, including the fact that large multinationals are locating plant in India now, because the power system is more reliable, the ports, the road system. The human capital element, the labor supply has always been there, but now you have much more enabling government spending on the infrastructure side.